much value might there be given all of the headwinds facing this sector?
Well, we think that bank stocks have the potential to increase by 50% over the next 18 to 24 months. I think it's underappreciated just how much heavy lifting the banks are doing and how they'll be able to pump their way through this. And banks are experiencing 4 100-year events at the same time. The decline in the net interest margin, the worst in 100 years. The decline in traditional banking revenues, the worst in 100 years. The decline in total revenues, the worst in 100 years. And the buildup of reserves has been the highest in history. So when we talk about heavy lifting, banks right now have a level of reserves for problem loans equal to half the level actually experienced in the global financial crisis. So, we think that the foundations are strong and earnings could be like a coiled spring if and when you have more of a, positive light on the economy or a vaccine or some other, measures that get the economy going.
Yeah, and that answers kind of the first big question people have on a lot of the banks, which is those credit problems. They say, hey, this is just going to be, look at examples from Europe, look at examples from other places where they've been dealing with bad credit outcomes for a long time. I'm curious about the differentiation. Obviously each bank has its own portfolio, different parts of the country, different types of consumers. Would you favor one kind versus, one type of name versus another in this environment?
Well, I would like to validate what you just said. These are sobering times. In our models, we have loan losses increasing by about threefold over the next few years. It's just that the reserving for those loans, we think, hit an inflection point in the second quarter that's being underappreciated. But you led off talking about Warren Buffett. Warren Buffett has bought stock in Bank of America for 13 days. 13 separate days in the last 3 weeks. He is a serial buyer of Bank of America. So we think he's on the right track. The largest banks, Bank of America, JP Morgan, and Citigroup, the theme is that the largest banks are capturing more share, especially when it comes to digital banking, and they also have more scale to better control expenses. So even while these revenue headwinds are, once in 100-year events, the ability to control expenses, we think, will distinguish this recession versus others, as well as the buildup of reserves for those problems is the greatest for any recession experienced in the U.S. So banks have a war chest. They're ready for this. They are strong. It's really the one word for banks would be strength.